Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 13th of April. Starting off with the FTSE 100, where 8,000 looks to be the level in question, and although the futures closed above 8,000 on Friday, the closing level there, 79.64, so a little bit shy of the level we wanted. Initial target, if we get through 8,000, is 8,200, and that would then above that would suggest that we're back in business in terms of the big uptrend that we had from the end of 2023. Seems quite remarkable, but with Trump's U-turns all over the place, that's possible. On the downside, not expecting now anything lower than 77.30, which was one of the previous possible targets on the downside. Ideally, we stay above the Friday support there near 78.70. Moving on to the DAX, and presumably another beneficiary of the U-turns over the weekend. As far as this market is concerned, it's all about the 200-day line, 19,900 above that. We're looking perhaps to fill the gap up to 21,600. And that hopefully then the market will be back on track. But it would be amazing if we get off that lightly for this market. If you're looking for another kind of trigger for the upside or a turnaround, then it would probably be the resistance line there that one can draw through recent highs. So that's currently around 20,800 on that market as an end of day close target. Moving on to the Dow, and here obviously a messy week, but was a market still trying to get back in business. We're back above the August support there, 38,500. The level now, really, that 40,500 level, the previous downside target, and also to get this market back above RSI 50 versus 44 at the moment. If we can do that, then the bottom of the old rising trend channel from May last year, 41,700 would be the target. This stage, ideally, we stay above the old August support there, 38,500, whatever happens. Moving along to the situation at Bitcoin, and here reflecting the better look for the indices. So bouncing off that support line projection, the bottom of the triangle there since November, 75,000, and above that we've been looking for not only the 200-day moving average at 87,000, but the old pre-breakdown support area at 90,000. The RSI closed above neutral 50, and the market, I think if you look closely, was basically on, or is on, that 50-day moving average. So that is more encouraging than usual, but I suppose the main force behind this market is that rising 200-day line, which hopefully will be a magnet for the upside. Moving on to gold, where there are no quibbles at all. It's been almost perfect in terms of the pullback, which basically tested old resistance near 29.65, and the 50-day line, and then back up to the top of the channel. The top of the channel now actually up to 32.30, so that's our target for this market near term, and then after that we can upgrade as we like. I suppose if you are anticipating the next leg up, it would be the top of that wider trend channel towards 3,400, which actually was the destination we were looking for by the end of this month, if we hadn't had that tariff breakdown that we had in the last couple of weeks. Moving on to the stocks, and starting off with AFC, here you can see that we've been in this falling trend channel, and that's been in place since November. What's interesting now is that we gapped up during the week, and we've held that gap there towards 5.9 pence above that, looking for the top of the channel there, 8.5 pence by the end of next month, or even sooner. EQTEC has been flagged as a potential turnaround situation, and so far it's delivering the goods, even though the history of the stock has not exactly been great. But here managed to hold the gap there that we had on Thursday, and above that at 0.65, we're looking for 0.9 pence plus by the end of this month. Well, rising 50 and 200, rising 50-day moving average. Obviously, the initial resistance there is the 200-day line at 0.79. We haven't been above that since it appears to be like the dawn of history, but it's actually back in 2021. So that would be a sign that we are turning around properly for that stock. On to ECR, where I know a lot of people will be winning the shares up after the rug was pulled back in November. Here you can see we've got bullish divergence going into this turnaround that we've got at the moment. A bit of a bear trap below 0.2 pence as well, and above 0.2, looking for the 200-day moving average at 0.29. Obviously, the potential fundraisers permitting, but looks rather better than it has done for quite a while. And we are back above RSI 50 on that situation. Lots of gold stocks finally responding to the rise in gold. It's taken a long time, and obviously the stock market failing in its mission to be a leading indicator. It's been a lagging indicator as far as many gold stocks are concerned. Here you can see gold effect, where we're soaring now with a rising 50-day line. Looks like we've got a rising trend channel there from back in April last year, or April 2023 rather. That's heading with 63 pence, which we're looking for by the end of next month, while we're above that 50-day line at 44 pence. Now, the gold producer is Goldstone, and here just needs to properly break that resistance line there from November. You could argue that it's already done that, but at least while we're above the 50-day line at 1.1 pence, looks like we're on our way. And we've had RSI bounces at neutral 50 as well, so that should mean we are on our way and hopefully heading to the top of the range towards the 2 pence level as soon as the end of next month. Delighted that stock, which took a lot of flack from the bears over the course of its early existence on the stock market, is pushing through the 200-day line, managed to get through there on Thursday and held it very well with a hammer candle on Friday. That suggests that our target, our third target there at 14 pence, should be a done deal by the end of this month. And if you're a fan of the shares looking for greater glory, the next level up would be the upper parallel of that line at 22 pence, maybe sometime for June onwards. But at least while we're above recent resistance at 9 pence, looks like 14 is on its way for Georgina. Onto a stock which has also had a bit of a rough ride, which is Invinity, but here we're above the 50-day line, and supposed to be a little bear trap rebound from below the old September-October support there at 8.6 pence. Above that, we're looking for the 200-day line once again, maybe the second time lucky to break that at just under 15 pence, and then ultimately, perhaps as soon as the end of the next month, as high as 21 pence. Next candidate is also on the other front rather. We need to stay above that 50-day line, 10.9 pence ideally going forward. Moving on to the stock which keeps on giving, which is Metals One. Here, the feeling was that around the 2 pence level, the old 0.2, the shares were delivering a bullish divergence and a potential support line rebound. Obviously, we've gone mad since then. The initial target there was around 7 pence. Then we were looking for 14 to 15. Then we were looking for 20, and now looking for as high as 40 pence. While we're above 20 pence, I suppose we could possibly get there by the end of this month, which would be quite a coup, and obviously is the opposite of what people said at the time of its fundraise at the end of January, when the shares were at 2 pence. Moving along to a stock which I don't cover very much, ProCook, but here we've had two unfilled gaps to the upside. It's a bear trap island reversal, so one of my favorite setups and one of the more reliable setups. 200-day line already rising, suggests we're going to a golden cross hopefully later this month. Top of the broadening triangle there as high as 44 pence, and we might hit that by the end of this month, given that bear trap island reversal that we have seen. Ideally, we stay above the 50-day line at 25 pence. Another gold stock which is finally moving is Serabi, which has been moving quite some time. Here we've got a rising trend channel. Top of the trend channel is the upper parallel of that support line there from back in August last year, and I suppose actually it's heading for as high as 205 pence. We're looking for that while we're above the 50-day line, rising there at £1.47. So that looks good, as does the RSI trendline break that we had back on Friday through the neutral 50 level. UOG, otherwise known as United Oil and Gas, has been in a horrible bear market for various years, but here we've had another gap higher this week. We had one back at the end of March, and that suggests that the bears are finally out of this one. Looking for 0.15 as a minimum here at the top of that broadening triangle from December. Best case is that we're up to the filling that gap there from December, 0.19 by the end of this month. Multiple RSI rebounds above neutral 50, which is another positive, and gives this chart the best look it's had for quite a while. In fact, you could argue that the gap down there, or the gaps down there we had there in December, and the gaps up now are a bear trap island reversal. And once again, that is one of the strongest setups you can have. Moving on to Thor Explorations, which I interviewed during the week. I thought it was one of the best interviews that I've heard, let's say. And here we're rapidly approaching the 32 pence target that we've had for quite some time, basically in the low 20s. And to help things along and cheer people up a bit, the upper parallel of that rising trend channel there from the middle of 2023 is as high as 47 pence. So through 32 pence on a quick basis, hopefully in the next week or two, then we could head up to the upper 40s by the end of next month. Finishing off with a situation which I do cover quite a lot, which is Zinnwald. Here we managed to identify the overshoot to the downside below 4.5 pence. That meant we were in a falling trend channel. Top of the channel there was at 6.8 pence. And above that, we're looking for at least 8.25 pence by the end of this month. But see how sometimes the markets do overshoot and they do get it wrong. That's it for me today. More updates tomorrow.